Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so first and foremost, we got some data out this morning. We'll get into what the markets are doing and what the charts are telling us, including key trade levels for the day. But before we do that, let's talk about the economic news this morning. We got PPI data this morning. All right, so PPI data coming in better than expected. Now, remember, PPI stands for Producer Price Index. Yesterday, we got CPI data, which is Consumer Price Index. Essentially, Consumer Price Index is the inflation that we're seeing on our side versus producer price is on the producer side. Now, the fact that today's producer price index was 0.1% increase versus 0.2 expected or forecast, that tells us that, again, inflation so far is not showing up on the producer side nor the consumer side. Now, listen, is there hidden inflation in there? Probably. I think we can all see that in certain things like car insurance, homeowners insurance, things like that. But at least the way they calculate it, you're not seeing that inflation bubbling up yet, even in spite of tariffs. Now, listen, could it be that so many companies bought so much inventory ahead of the tariffs that they're still working through that? That's my thesis. My thesis is we will see an uptick in the coming months, but so far we have not. Now, listen, markets overall are trading still under a little bit of pressure, though we have come back. So let's take a look at the charts here. We're going to get into it. So you can see that, again, this is the pop here on PPI. PPI data getting us the stocks to pop up this morning on the S&P futures. Now, if you look at where we closed yesterday, we closed up here. So we are still net negative on the market. Now, what's interesting is yesterday we had a pop on the CPI data right here, right? Big pop. I talked about this yesterday in the game plan. Beautiful move to the upside, right? But what's interesting here is that it didn't hold. And what you remember, folks, if we go back here, if you remember yesterday, I've been talking about this cycle date coming up that, again, we've calculated here at Verified Investing. And this cycle date, one of the things I said is that we're just on the outskirts of it. It's basically, basically the window would be Thursday, Friday, Monday, Tuesday, Wednesday of next week, that window right there. And what I said to you yesterday in the game plan is we're rallying on the CPI data. If the markets close flat or negative and ignore the good inflation data, that could be essentially a breadcrumb to that the cycle date is at hand. Now, yesterday we did close flat to negative on the day. And so these are just little breadcrumbs that I watch as an investor or trader to kind of keep an eye on things. And we can see, again, markets popped, then we faded, we bounced up here, then we just basically high, lower, low, lower, low into the end of the day. Then in the overnight, we sold off here and kind of even went lower in the early morning. And then obviously what we've seen here is a pop back up on the back of the PPI data, but still net negative. So same thing today. What am I watching today? I'm watching very closely to see how the markets behave. We got another good data point out this morning on inflation. That's good. So the Fed potentially can cut rates if they need to and be pretty aggressive because we're not seeing that inflation yet. Yet at the same time, will the markets climb higher or will they sell off anyways? And once you start seeing the market selling off on the back of good news, that's an indicator that you're seeing institutions selling into retail. Now, why would that be? I mean, let's just think about that. Because retail is going to look at the headline numbers and say, "Oh, this is good news, just buy." Institutions are sitting there saying, "Okay, at what point are we at levels that are unsustainable, at valuations that are unsustainable? At what point do we say, okay, the inflation numbers will come, the economy will slow, tariff trade stuff could get worse?" All of these factors, and they start selling into it. So it's an indicator of essentially big money selling into small money. All right. So let's take a look here, guys, at the charts. Again, nice pop here on the PPI data. We're starting to pull back just a little bit on a technical basis. Notice this high from the early morning. And where did we go right here? Right into that level. Now, if we flip over to the S&P 500, the S&P 500 had a little down day yesterday. One thing I showed you guys yesterday was this cool trend line. Take this. See how markets came down, up, and then had the big fall? Take that high, connect it through this up down move here, right to there, and stretch it out. And we actually have a little bit of a trend line there. So we talked about that as not being huge resistance on the market, but it's a level to just keep an eye on. And sure enough, we did get that little pullback yesterday on the S&P. Now, the S&P yesterday only down 0.25%, wasn't anything to write home about. But the key was, again, good data did not push the markets up. In fact, we saw sellers coming out of the woodwork. All right, take a look at the U.S. dollar today. We may have an official breakdown. We don't have a confirmed move yet, but it is below the line. But what I think is significant about this is that these aren't just arbitrary kind of trend lines, one going this way, one going this way, right? That's not what we're seeing here. What we're seeing here is an obviously long-term trend line going back here. And then notice how we put in a parallel to that, a parallel line to that right there. And now we're breaking. So this to me is something that likely will turn into a real breakdown on the US dollar. Now, again, cheaper dollars or lower dollars, it's bad for those of us in the US. Our buying power goes down. But if you're an international company, if you're someone who sells a lot of goods overseas, it actually makes your goods cheaper. So it's positive in some aspects, but generally, if you're an American, if you're living in the U.S., you want to maintain a strong dollar for purchasing power. Okay. Now, if we flip over to the U.S. 10-year, this was a great early week call by me here. We broke below here last week. We rallied back to the scene of the crime on Friday. We talked about a rejection here based on resistance, right? Support line here now becomes resistance. And what does the yield do? It falls. And again, yields fell yesterday. And again, I want to be clear on this. The long bond, the Fed has no power over the long bond, right? So the Fed controls the very short-term intrabank lending rates, basically the short-term rates. The long bond is controlled by the market. So the long bond, for those of you that don't know, is the 10-year to the 30-year. But the reason why the 10-year goes down is because the markets start to sense that the Fed is more able to cut rates, and that has an influence on the long bond in the near term. Now, listen, if we see today the 30-year bond auction, and that's something important to note here, right? So today we have that infamous 30-year bond auction, $22 billion being sold by the Treasury. We're going to be watching at 1 o'clock how the results of that bond auction go. But essentially, if people start saying, hey, let's say China, Japan, all these other countries, they're like, no, you know what? We don't really want to buy the US 30-year because we don't believe in the sustainability of the US for 30 years with the debt that we have. Then all of a sudden they could say, hey, unless you offer us 7% or 10%, we're not going to buy your debt. And ultimately, rates would have to go up. The US has to sustain its drug addiction on debt. And so the long bond would go up. Now, the Fed could lower rates all they want on the short end. It wouldn't matter on the long end, right? And so I just want you guys to understand that is that the Fed doesn't have ultimate massive control over yields on the longer end of the curve. And that's where ultimately the rest of the market will eventually put pressure on us, or the rest of the world will put pressure on us to make sure we get our debt under hand. They'll essentially force austerity. Now, that's probably not going to happen in the next few years, but if you get a chance, take a look at Jeffrey Gundlach. He went into, this was a Bloomberg interview, a great interview by with Jeffrey Gundlach, where he talks about this, and it's pretty powerful. I think it just came out yesterday. Anyways, all right, let's go on to some charts here. Boeing is dropping sharply this morning. It has rallied back here. Unbelievably horrible tragedy in India. My heart goes out to all of those affected there with the plane crash. And again, so does everyone here at Verified Investing. Our hearts do go out to you guys out there. Just horrendous. But again, it's a Boeing plane, and we know that, again, generally Boeing has not had a great track record over the last decade with issues with their planes. So we've seen this come down pretty precipitously. It is rallying back a little bit. Notice how the rally on Boeing is coming back with the stock market bounce. So basically you're coaxing in buyers because the stock market is bouncing. Now on a swing or day trade basis, this is the obvious level. So we're still a fair amount away from it. It's at 188. But if we got down to 188 today on a flush on Boeing, there should be some technical support. Notice pivot high, and then just a little bit lower here. but pivot high right here before a breakout. So kind of the same thought process, right? Where it's resistance keeps hitting and pulling back, then it breaks out. The idea is if price comes into that, it now acts as support. Resistance becomes support, and you would anticipate a bounce off of that. All right. So just again, that's a level to watch. GE is also down, but having rallied pretty nicely back here. GE, they may have made the engines for this plane. So if there's an issue with the engines, then that would be obviously on GE. GE, by the way, look at this. This is just the power of charts, guys. It's almost spooky, right? So you had GE in this uptrend, and just before this happens, it breaks down below this trend line. And then all of a sudden it's starting to drop more and more, right? It's while charts cannot predict the news that will come, weirdly enough, they tend to show us that something is coming, right? They don't know what it is. We don't know what it is. But in this case, again, just an amazing example of that. And yeah, I mean, it's just really unbelievable in that respect. All right, GME, let's look at GameStop. GameStop is getting trounced here. They're basically talking about buying more Bitcoin, which means diluting shareholders again. Now, you might say, well, for MicroStrategies, this has been a great policy. Yeah, that's true, because it's run by Michael Saylor, who's like the oracle of Bitcoin, or whatever you want to call him. GameStop, to me, the reason why this stock is down, number one, it's diluting shareholders. But like I said, MicroStrategy has done that all along. The difference here is that it's very clear that GameStop is waving the white flag on their business, right? Their business is done. They wouldn't be going this route unless they realize their business is done, unfortunately. And basically, without someone like Michael Saylor at the helm, that investors are very skeptical that GameStop is going to do this correctly, right? GameStop's buying up here at $108,000 on Bitcoin. What if Bitcoin pulls back to 50K or 70K or 80K? What does that mean here, especially when the underlying business is dead? Now, on a technical basis, is there a trade here? Yes, there is. There's always a trade, right? For me, I will be watching this trend line here, which we're kind of very close to. And then secondarily, there'll be a level right down here. So I don't know if I'll trade this first level, which is right around 23.15, but I would be interested in a day trade only at 21.50. As a swing trade, I'm not a buyer of GameStop, guys. The other thing, too, is talk about charts, right? Notice this. So charts predict something is going to come, right? It's uncanny. Whether this is insiders that know ahead of time, I'm not smart enough to know what the ultimate is. But look at the down move. What type of pattern is this, guys? All right, quick quiz. What type of pattern? You have a down move and then inside bar. I've taught this in every game plan. We've seen one of these. This is a bear flag, right? And then lo and behold, it breaks the bear flag, so the bearish move starts. What happens? All of a sudden, news comes out and the stock goes down, what is it, down 20% today or something like that? But isn't that freaky? I mean, it's like the chart literally was telling you something was going to come out that was going to make the stock drop sharply, and boom, it does that. Just like I showed on GE with that breakdown there. It's uncanny. But in any case, again, those are my levels. But to suffice it to say, I'll probably only look at this level here if it gets down to around 21.50. Oracle today is trading sharply higher. Let me get rid of my old trend line here. But you can see Oracle's trading up here. I do have a level on Oracle where I will be looking to potentially short it. I have a zone here, basically right up in here between 196.50 and 250, 200.5, I should say. This is my short zone. Huge double top, pivot point, and even number at 200. So that level for me for today would be an interesting day trade. The stock is already trading up near 191 on the back of good earnings. So again, if we look at the intraday, here's where earnings were released. Interestingly enough, the stock initially flushed, but then recovered and has traded up pretty nicely. You can see here it was all the way up to 193. So 196.50 is not that far away. That would be a starter position, being ready to add all the way up through the Pierce of 200. All right, on to Bitcoin. Bitcoin continues to pull back. Interesting on Bitcoin, it wasn't able to get back to this level. Notice again, the stock market was down yesterday. The stock market is down today again. Bitcoin down yesterday, Bitcoin down today. Here was the last down day on the stock market right here. This was last Thursday when Elon and Trump had their feud on social media and Bitcoin was down. So you guys see the pattern here. And I drew this in because I'm a true believer that eventually Bitcoin becomes a safe haven asset. And we've seen, I said this yesterday, we've seen flashes of it being a safe haven asset, like when yields were jumping, even though because of Liberation Day and people were, countries were refusing to buy U.S. debt, which then made Trump backpedal on that. I mean, all that stuff. But essentially, that was like a blip on the screen where people said, oh, well, if we don't want to buy the dollar or U.S. treasuries, where do we go? Let's go to Bitcoin. It's a great sign to see. It shows you that there's something there on Bitcoin. But overall, that's about 1 or 2% of the time. Otherwise, when normal markets are behaving normally, it remains a risk asset. And we can clearly see that by just looking at the down days in the stock market, matching up with the down days in Bitcoin. Bitcoin down today. We talked about how the stock market was down slightly, although off of its lows earlier. Support remains down here, very clear zone here. You can see all these little wicks down here or tails. And then right here we pierced, but then we reversed. So that continues to be support. Resistance for me would be continuing to be around $12,500 to $700 on that. Gold today continues to act well. Take a look. Gold is up about $27, 0.8%. We talked about the downslope here, hitting resistance, but also holding major support, upsloping and across. So this was bullish consolidation. The longer-term trend line is still intact. It hasn't been broken, so that's good. And then once we broke above this trend line, consolidation, retrace to the scene of the crime, and right up again we go. Now look at this. This is interesting. This is very obviously short-term resistance right here around 33.85. If this gets through here, we should test 34.40. And if that gets broken, back to 3,500 all-time highs. On the risk side, I'd start to get worried if you start breaking this zone here, anywhere between 3,200 and 3,140. If you get below there, the long-term trend line that goes back to the start of this year would then be broken. That would be the only way I would turn more neutral to even slightly bearish. Right now, as long as we remain above this line, I remain bullish on gold. Silver today, kind of all over the map. Again, you guys know on this date right here, I unloaded my silver position. I'm just sitting in cash in terms of silver right now. But again, a pullback here gets me long again. And then really, again, I don't know if I'd short it, where I'd short it. I would say if you zoom out on the chart longer term, maybe if we shot all the way up to like 48, maybe I'd short it there. But I really don't have an intention on shorting it. I don't have a good enough setup, and it's not honestly extended enough in the short term. If we look at this, it's basically been going sideways since 2024. Like even over here, it just went down, up, down, up, down, up. Now it's breaking out. Generally, you don't want to short something that's just breaking out of a 2-year consolidation pattern or a 1.5-year consolidation pattern. You'd want to buy pullbacks, right? So the idea here is if we extend this line out, you can see this pivot here. So if we pull back to that, that would be what we call a retrace to the scene of the crime, and that would be a buy, right? So again, that's kind of the angle here that I'm taking on it. Yes, this is resistance at 37.50, but it's not shortable for me. It'd just be a level to watch and kind of monitor. All right, now oil. Oil's a big one here, guys. So oil, I did short it yesterday right up here. I added to my short later in the day because, again, there was chatter that we were seeing evacuations of personnel from Bahrain and Kuwait, and oil was spiking on the worries that there was going to be some attack on Iran. As of now, I haven't heard that anything's happened, but oil, again, because of that, you can see it's pulling back. So, again, coming back in here. But by the way, I'll just throw this out there to you guys. So we just got CPI and PPI data out, right? Well, guess what? If we go back here, what do we see? That was so if you go back to the beginning of the month, so basically remember the CPI and PPI numbers we got, this was the last day of the month on oil. Look at what oil's done since then. So we talk about inflation pressures. Oil is up 10.4%, and that's not going to yesterday's high or today's high, just to where it currently is trading. But just in 12 days of the month, oil's up 10%. So now all of a sudden, you have a situation where oil's been generally going sideways or lower, but now in the new month, which will be reflected in the next CPI and PPI number we get, oil has already rallied over 10%. And so you just have to be aware of that. Just keep that on your radar. Maybe by the end of the month, we come in on oil all the way. But again, we don't know that yet. And right now, oil up 10% for the month. Natural gas not doing much here. A little bit of an uptick. Again, just trading. To me, it looks like more and more that it's just trading in a short-term inside parallel. So if we go right here, just move up, move down, move up, move down. And this, again, to me, would be overall slightly bearish because it's coming off of this down move. So I'd slightly favor the downside, but not a high enough percentage for me to short natural gas at this point. All right, guys. All right. Now, you can see at the bottom of my screen, our second annual Investor Empowerment Day is coming up on June 23rd. I will be live on our homepage. I will be having my day trading account up. I will be trading. I believe it kicks off at 11:30 a.m. after the morning session in the trading room. I'll still do my game plan in the morning. But again, guys, this is going to be an epic day of trading live, talking, educating for multiple hours with me, the rest of the traders. It is going to be awesome. So put that on your calendar, guys. It is going to be an epic day. The idea of Investor Empowerment Day is that we are here to educate and to help investors on their journey to financial independence. And how do we do that? We do that by, first of all, being unbelievably transparent. I always say to you guys, I'm not a 100% trader. I have my losses. There's no trader that doesn't. But I'm a true believer, and proof is in the pudding with what I do, and you guys watch all these game plans and see it, is that if you look at the charts tell you something, and they give you the ability to at least get the probabilities in your favor. And so if we educate ourselves, we can literally start taking control of our financial destiny. And that's the key. That's the key, to step the heck up. No more time of saying, hey, let me go out and blow my money doing this. Put a few bucks aside, build that. Slow and steady really does win the race in this game. And I know each and every one of you can, whether you're starting with $100, whether you're starting with 1,000, 10,000, there is a path when we do things right, when we ignore emotion, when we ignore hype, when we ignore narratives and focus on probability, there is an end game. Smart investing is the way to real wealth. All right. On that note, guys, you folks are awesome as always. I do thank you so much for coming out each and every day. I'll see you later. Take care.